All right, everybody, we are back for another episode of We're Doing Chaos to Control. And this is our series that we do where we bring in other professionals and experts in order to be able to help to enhance your business acumen. And let me tell you, today we have a special guest because we were at a conference for the MWB coordinators for the state. And I had said, congratulations on her new job. And she came up to me and she was like, you said congratulations to me. And it was one of those things where it was like really good. And we had a nice conversation. I was like, listen, I would love for you to be on Chaos to Control because of what you do. So I'm going to invite right now, Eunika Smalls. How are you today?
I'm
Can you
doing
hear me?
well and blessed to be here. Yes, can you hear me?
Yep, we can hear you.
Yes, I can hear you. Okay,
All
awesome.
right. So
Thank you for the
we are
opportunity to be here.
Yes, definitely, definitely. Now, I want to let the audience know if you do want to ask questions, you can type them into the chat and you can make comments. And what I'm going to do is I'm going to let Eunika introduce herself and give you a little bit of the background, and then we're going to get into our presentation for the day. So tell them about yourself and what even made you become a CPA. Just give us a little bit of background on that.
Sure. Good afternoon, everyone. My name is Eunika Smalls, and I happen to have over 20 years of experience of financial accounting experience, including tax and audit. What made me want to become an accountant was I actually was in a Pathways program, and the Pathways program from my high school to college introduced me to more CPAs. And to be quite transparent, there wasn't a whole lot of people in the field that looked like me. And I had always been told I had a knack for numbers. And so I decided to pursue accounting. And that's how I became a CPA. And I'm happy that I have the skill set. And I'm looking forward to sharing this knowledge base with all of you today.
And that's good because a lot of times people don't know what they want to do in high school. So for you to have some type of program that was there that then set this career trajectory, I think that that's important. And I love the fact that you said that there weren't a lot of people that look like you. But what we do know is that a lot of times people, and I'm going to put this in quotations, do taxes, right? They do
Mm-hmm.
taxes, but that
Yeah.
does not necessarily mean that they're a CPA. So to me, that's an important, thing to bring on the show is people that are actually in this business, but that have the training. And, one of the things that I tell people about taxes, that is not my ministry. And if you love it, then good, because you can help me to be better with my business. And so that's what we're here to do today. So I'm going to go ahead and I'm going to add our presentation up on the screen just so you guys can see what's going on. And today is one of those days that I love because this particular series was really designed from saying, well, look, what are business owners missing? What do they need more of? And so we like to partner with government agencies. We like to partner with state agencies so that this way our content is going to be something that no matter where you're at, you'll be able to get access to. And so this is our fourth one of the year. And then we're going to, of course, jumpstart back once we get to January. I'll tell you about that toward the end. But anytime you're looking for any of our programming, you can go to giveittothepeople.com and then /classes. Now, business taxes. Hold up. That I was supposed to change that. Don't even worry about that. So we're talking about business taxes today. And so what we've done is kind of design this so that this way, we have an idea and a frame. And the Eunika is going to be able to give us some information. So one of the biggest things that I think about with business taxes is first organizing those financial records. So can you speak to some of the things that people need to get together when they're talking about, listen, I want to get my taxes and I need to bring them to you so that you can help me?
Sure. And this is just not advice that's specifically related to tax, but all year round, some of the tips and tools that I'll share with you today is something you should be mindful of throughout the year, but specifically as it relates to taxing and getting prepared. 5 things I want to mention to you. One is to make sure that you're separating your business finances so that they're not aligned or not getting confused. They need to be in 2 separate accounting accounts with your banking institution. Also, it's very important that you reconcile your accounts. Ideally, you would want to reconcile your accounts on a monthly basis, but not going more than 3 months, because as we all know, we can lose track of things, or our memories are, if you're like me, it's not quite as good as it used to be in our heyday. You want to make sure that you are looking at your accounts and your transactions on a daily basis. You also want to make sure that you are credit card statements. You also want to make sure that you're using appropriate accounting software. And for small businesses, I highly recommend QuickBooks and Wave to track your income and your expenses. And again, being timely with this is extremely important, because what you don't want to wait to do is to wait to the end of the year and then have stacks of reconciling items, receipts that have not been put into the systems, and even sales sometimes to recognize that income in a timely basis. You want to also, as you go along, you want to save your receipts and kind of keep them categorized. You want to have your office supplies, your travel expenses, your meals, conferences, your inventory, in major purchases that you may have partaken in throughout the year. You want to have them separated out, and ideally chronological order and by category. You also want to make sure you're looking at your chart of accounts. So your basic chart of accounts includes your assets, your liabilities, and then there's the owner's equity section, of course. And then you want to always be mindful, and this goes without saying, of your income and your expenses, which produces your profit and loss statements.
Mm-hmm. Okay. And so if a person is saying, listen, I heard what she said, but there are some things that I'm not too sure of, where would you give them maybe as a good reference to be able to go to kind of look up some of this information so that this way they can be a little bit more cognizant of the actual things that they need to have in order?
I am going to advise, but the ultimate guide is the IRS, because that's where the reservoir of all the rules and regulations. And to be quite transparent with you, these IRS rules and regulations typically change from year to year, but especially when there's an administrative change at the higher government levels. And as you all know, we'll be transitioning from a Democratic administrative force to a Republican force. And so ideally, or normally when that happens, things change more rapidly. So certainly I would advise you all to reference the irs.gov website.
Okay. And then another question would be, is there a reason that you would pick QuickBooks over Wave or vice versa for people who are looking at the software to get?
Wave only has the tax and accounting to a limited extent. Having used both softwares, I'm going to say, if I had to pick one over the other, and as a total disclaimer, it's a user preference, what you're more familiar with. And I just happen to be more familiar with QuickBooks than Wave. I've just used it for so many years that it's almost like second nature to me. I'm more of a newer user to Wave, but a lot of the functionalities are shared by both.
Okay. All right. Is there like a really big difference in price? Because I know with QuickBooks you can do it online, and so some people want to go for a cheaper alternative. But one thing that I know that a lot of people that use QuickBooks, and so my accountant uses QuickBooks, so therefore I send the information. She already has everything in there and has my account with that. But as far as a person, if they're saying, look, I want to set it up myself, would you advise that, or would you say go ahead and get the accountant? And I really want you to say go ahead and get the accountant, but I just want to.
Well, that's what I would advise. You're totally brilliant, because that would definitely subject matter experts or your reference source. And because again, I can't tell you how rapidly things change in the IRS and federal rules and regulations. In fact, we just had several changes take place. They may not always be specifically related to business owners, but certainly income tax and corporate level as well. So it's their responsibility. It's the professional's responsibility to stay up to date and well informed on all those levels. But certainly, I want to say a business owner needs to be at least familiar, somewhat familiar with the cash flow process.
Okay. All right. And that's good, because I know the thing is, a lot of times people want to save money, but when you mess up the taxes and then you have to go back and try to configure what you needed, and maybe, even just from accountant to accountant, they may have something in a different category because of the different type of business that you have. There may be something that they would have done differently than if you did it, because maybe that's not your area of expertise. And so I'm always of the mind to pay the people that are experts at what they do. And then this way you don't have to worry about being stressed.
Certainly that peace of mind comes along with using a subject matter expert.
All right. Well, I love that. Okay. So look, next, guys, this is it. And this is one of my favorite things that me and her, we had this discussion. And when I said, I definitely want to talk about maximizing deductions and credits. And so with this, we'll spend a little bit of time here, because if a person is a new business, like they just started this year, are there some things that maybe you might tell them to write off in comparison to somebody that was already established?
Where normally new businesses may incur more costs as it relates to equipment costs, which is capital, which would fall up under section 179. And so you want to make sure that you are writing off the maximum allows, what usually there's a bump up in the first year. So that first year you may have more of an advantage of writing off depreciable assets that are called 179 accounts. And then, as always, once you've taken my advice that I've shared earlier and gotten your documents in order, you want to take time and identify which of those expenses particularly are able to be deductible, such as your advertisement, your rent, your utilities, and professional fees, because you've paid an accountant, a lawyer, etc., professional services fees throughout the year, and you want to make sure that you're writing those out. And again, depreciable assets, which are particularly acute in the first year, because you're acquiring that equipment in the first year, and you can write off up to the threshold, which changes from year to year. And you also want to make sure that you're leveraging information about research and development tax credit, as well as work opportunity tax credit for hiring employees from a specific targeted group, energy credits, which come from investing in energy efficient equipment and renewable energy. And you also want to be mindful of your health and retirement plans, which are also deductible as expenses against your business.
Okay. And that's a lot to think about, because a lot of times we're thinking about the things that we purchase. And we're not necessarily thinking about, okay, there are other options. And I know, just because of going to a lot of different seminars and conferences and things of that nature, one thing that people are talking about specifically is the blue economy and the green economy. So blue meaning pretty much the things that deal with the ocean, right? And so my people that are out at the coast, there's a whole nother level of money that's coming in for different types of things that work with, sea life, and just being able to produce things based on being at the coast, water, things of that nature. And then the green economy, all of that energy efficient. Like, so when we're talking about skylights, what is the thing? Not skylights. I'm trying to think of the word, solar panels, and all of that. Now we might be thinking about that for like big businesses who have like a space that they own. But you mentioned that there would be some other credits that people could get if they're buying energy efficient machinery, like equipment for their business. So can you go a little bit into that?
Sure. There's a specific list that has been put out by the IRS. And if you're right now, again, a lot is driven by administration. And with the Biden-Harris administration, there were a lot of incentives that were put out with the Inflation Reduction Plan that offers incentives for energy efficiency as well as renewable energy. And that list is quite extensive, but I would encourage each individual, if you think you purchased something, and a lot of times even on the item, it'll tell you that it's eligible for the tax deduction as well. And that's always a key selling point with salesmen as well.
Wow. Okay. So that's something where we can go look at the list, see if we made any of these purchases. And if we didn't make any, but we have a few days left in the end of the year, and we want to make some,
yes,
we could at least get it before the end of the year. And then that can be something that can be written off.
Certainly.
Okay. And I love that. Now, one thing that I want to get into, because this is one of the biggest things for me, is when we talk about mileage. And, I put mileage over gas, because The thing is that you'll get way more money back on your taxes when you talk about actually tracking your miles. And so these are the numbers that are on your screen that are here for this year. So can you talk about, why a person would want to really keep up with that mileage and, just some of the savings that are that accompany it?
Sure. And I want each and every one of you that are on the call today to be particularly careful with regard to mileage, because you have to keep track of it. And there are several apps that are available for tracking business mile versus your personal mile. And so here are some of, as indicated on the screen above. So you got business mileage, which is currently at a rate of 67 cents per mile, medical mileage, which is at a rate of 21 cents per mile, charity, if you're itemizing, and which is at a rate of 14 cents per mile, as well as moving expenses at a rate similar, right at the same rate with the medical at 21 cents per mile. Again, personal is not deductible at all. And so that's why it's key that you may want to incorporate a tool to help you keep track of personal versus business miles.
Mm-hmm. Now we have a question that says, how long do you need to keep the mileage records?
All tax records need to be kept at a minimum of 3 years. But if you're doing it for 1 year, I would certainly, one advisable tip I would say is to keep everything in chronological order and keep your tax record at a minimum of 3 years, as long as 7 years.
Okay. Now, next slide. Oh, no, I'm just sorry. I'm just going to go on so this way they can see that while you're talking. This particular slide is MileIQ. That's what I use in order to keep up with my miles. And then this way, what happens is each month when you go through, each month, actually I do mine daily because I have a little reminder on my thing to do my miles daily, because you don't even know how much you've driven in a week. Like you think you know, and you forget. You're like, where did I even go on Monday? Right. And it's still Monday and you don't even know where you went. So it's like, where was I at? What did I do? And that keeps a record of it. And so you swipe to the left if it's a personal expense, you swipe to the right if it's a business expense. And if you have 2 or more cars, you can add each individual car in there and then keep track of what each car is doing as well. And I just want to leave that up there and then let you continue with some of the stuff you were talking about.
Yeah, certainly we should all try to embrace technology to make our lives easier, quicker, faster, more efficient. And this is a tool that you can use to keep track, and you can almost start to do it as a habit. Once you get used to doing it, it tracks it automatically. So we want to take advantage of things that make our lives easier, especially as it relates to, you just talked about your memory. I'm having the same memory issues as you're having, and this just will make that not be as much of a hindrance or a barrier.
Yes. And then this is what it does too. So once you're done with the month and you tracked all of your mileage and everything for the whole entire month, it will allow you, so this is what I do, to send that report directly to your accountant. So this way she has everything. Well, my account says she. Then this way I don't need to think about it. And the other thing is that now it's done. And so then the next month you just go ahead and you do it. And then what it does is it shows you how much you're actually saving each individual month based on those taxes. And so it's one of those things where you really don't realize how much you drive. Now, when you first started, they give you like a free account, and I think it's like 30 drives. And at first I was like, oh, I'm not going to use these up. Ma'am, you use those days up like nobody's business when they give you that amount of drives, because you don't realize, like, let's just say you go from one place to another and, and you get out of the car. That's still a drive because you went from one place, you stopped, and then you got out and you went somewhere else. If you're doing a day where you're running errands, or you're doing a day where you're meeting clients, how many times are you getting in and out of the car and driving from place to place, lunch, all of the rest of that stuff? So you really need to kind of, consider that. And this has been something where before I used to be very lazy about doing this, to be honest with you. And then when I really started seeing how much I could save on these taxes from actually tracking it, it's totally and completely worth it. So the links on the screen, the QR codes on the screen, you can get it if you want. Now, because it's so late in the year right now, I mean, you could, let's just say you weren't using anything at all. You could track this little bit of miles that you had from December, but it's also going to make you put in what your mileage is starting. So at the beginning of each year, you'll say, this is what the mileage is that I'm starting at, like January 1. And then this way it'll be able to continually track, so that this way it knows how many you use throughout the course of a year. So that's one of the deductions that I would say that I love. Now, can you touch on for me, one of the things that I think people think they can just buy clothes for their business and they can deduct it. But we know you have to have something specific if you're going to get that.
With regard to laundering the clothes, you have to be able to tie it to a specific event. It can't just be casual clothes. You have to be able to tie that to a specific event. For example, swag. Some people call it swag. It's for that you may have purchased for a specific event that's related to your business expense.
So like if your person is saying, I want to wear my business shirts, and they have their logo on the shirts, that's something that can be written.
That is something that it has to be associated specifically with the business and identifiable.
Okay. And that's the thing. You can't just buy clothes.
No, you cannot.
No, that's one thing I want people to know, because they're like, oh, this is my business outfit. Okay, does it have a logo on it? Like, did you actually go through the part of making it where somebody can clearly see that it's about business? And so that's one of the things that I definitely want people to think about, because, I have a lot of business owners that they wear their business t-shirt, they wear their polo, they wear their jacket or whatever, and it has the logo on it. That's the stuff that you can write off. So I would say, because of the time of year now, if you can go ahead and order some of that stuff for your business that has that business, logo, monogram, or whatever on it, then that would make it. Oh, we have a good question. So Roberta Hadley said, I'm a tennis coach and deduct tennis shoes. So can she deduct her tennis shoes for coaching?
Yes. That is a supply that she needs in order to conduct her business. And yes, she certainly can.
Okay. See, there you go, Roberta. You get all of the good information right there. All right. So those are some of the things I just wanted to touch on from that area. Now, next, reviewing payroll and contractor payments. Because what I see is, now I hire contractors. Okay. Can you explain to people the difference between an employee and a contractor so that they don't get in trouble?
Sure. So these rules have changed over the years, but the primary difference is that a contractor can make way more individual decisions than an employee can make. For example, a contractor will primarily be concerned with completing the task, scope of service within the described deadline. An employee, on the other hand, is not only concerned with meeting the deadline, but you have told them the nature, how to conduct the service that they expect you to service. You provided a space for them to perform those tasks. And so that is the major difference, the level of control that the hiring person, the employer or hiring agency, has over the nature and extent to which that service is being provided. So if that person that has solicited your service can tell you pretty much the who, what, when's, where, and how, you're an employee. As opposed to a contractor, they've given you the scope of service and a deadline to complete that task. Now, this is speaking in, as a matter of fact, throughout this entire presentation over the next few minutes. This is general information. It may not be specifically related to you and your business. So I have to notate a disclaimer, because you will need a subject matter expert to be able to help you maneuver through the nuances of determining sometimes whether an individual is a contractor or an employee. But in long story short, it does highly depend on the level of control with executing the requested service that the employer or hiring agency has.
Okay. And then when people are reviewing their payroll, so let's just say we go with the people that do have employees, what would be some tips that you want to tell them, where I don't know if it's going to be tax saving or things for them to just be on the lookout for when it comes to the taxes, specifically this time of year?
Sure. So we want to make sure that employees are properly classified and issued their W-2s on a timely basis. If they are a contractor, the name of the document that should be issued is a 1099. And we also want to confirm our federal and state payroll taxes if they are employees. And always, always be prepared to generate and distribute those W-2s within the required time frame. And always keep in mind that the minimum, the threshold for a 1099 contractor employee is that of $600 or more during the year.
Okay. So I'm going to type that in for everybody. The minimum threshold, if you're having a contractor, is $600. So if you pay a person $600 or more throughout the course of the year, then that 1099 should be made sure that they receive that and that you have all of their information, EIN number, everything, so that this way you can send them their tax documents and also what you paid them out the whole entire year. Okay, minimum threshold.
Correct.
I'm gonna put that in for everybody, $600. All right. Now, if a person said, well, look, I paid somebody more than $600, but I didn't get a 1099 from them, then now is the time for them to make that request?
Correct. They should have, by law, it's required. You have to get that out to them. If you paid a contractor more than $600, it's your responsibility to make sure that they get that 1099 form.
Okay. And then what I usually do is when I hire a person, let's just say it's the beginning of the year, I ask for anybody that I think that I'm going to hire, specifically people that I know that I'm going to use over and over again, to make sure that they give me that 1099 at the beginning of the year, just in case anything changes. So that this way I have everything and it's covered and I keep up with it and I make sure I send it to the accountant. But a question here that I think somebody asked me about, to ask this specific one. So if a person has services and they are a contractor, but they have something where you just pay them online. So let's say like my photographer, if I go ahead, she sends a contract, boom, I just go ahead and I pay it online. Would I still need to do a 1099 from them because I'm getting a direct receipt as soon as I make that payment?
You would need to provide them with the 1099. If the cumulative, the professional service is in excess of $600, you are required to provide that document to them, and the required forms as well.
Okay. All right. And yeah, because I had a lot of people who were saying, well, they just go ahead and I just, do it online. And then, it's just like if I were going into, Walmart, right? And I were going to spend money. And so I get that invoice. And so that was one of the questions. And I thought that that was a good thing that we need to go over.
Walmart is not a contractor.
No, I was just saying Walmart just is like if you were making a purchase, like if I'm making a purchase somewhere, for them, a lot of times you're looking at it like, oh, it's just another purchase. But this person is actually performing those services directly for you and your business, which in that case would be a difference. So I think that the person that asked me this question was looking at it like it's just a regular purchase. But in that case, because they're a contractor, it's not a regular purchase. Like if they were going to a Walmart, this is saying you're rendering these services to me, and I'm paying more than $600 in the course of the year. So that 1099 should be provided.
Correct. And that was an excellent example as well.
Okay. Yeah, because I just wanted to, because I had somebody and I was like, well, no, you would still need to, and I said, well, look, just come on Monday and let's just talk about it over here when we talk about our business taxes. Because I was like, Eunika will definitely have the answers for people. Now, anybody else, if you still have any questions, feel free to go ahead and put those questions into our chat. All right. And is there anything else that you want to kind of touch on in relation to payroll and contractors, or anything that maybe is new that we don't know? Because one thing, and this is not necessarily in payroll, but it is adjacent to, so it's similar. But we discussed before what's getting ready to change as far as like Venmo, Cash App, all of those things, because some people are accepting payments. So even though it's not payroll, they're accepting payments through a different service.
That is that in those what we call third-party payment processor administrators, those third-party payment processor administrators will be sending you will be sending you documents related to, if you're identified as a professional service provider or business, they will be sending you tax forms out. And this year, last year, this has been in the works for several years. This year, they changed the rules. So now the threshold for third-party administrative payments is actually $5,000, and it will it's tiered in process, and it won't go down to $600 into 2016. And that regulation just got
You
updated
mean
in
2026?
November. A lot of people still think it's $600, but it's not.
Hold on, you mean 2026, right? Only because you said 2016, so I just want to make sure 2026.
2026, it'll be 600.
Okay, 2026 it'll be 600. So
Oh, I'm
we have another.
sorry.
No, it's okay. I just wanted to make sure
Yeah.
because I was like, hold up. So we have a whole year, and then by the time it gets to 2026.
26.
Okay. All right. Good. Okay. So let's keep it moving. And our next thing to go
it's not
over.
for $600.
Say that again.
I just want to make sure that everyone is clear on those thresholds with those third-party settlement payments. And so for 2024, the threshold is $5,000. Okay. So again, they're transitioning us into making sure we account for those third-party business payments. In 2025, the threshold goes down to $2,500. So that'll be the requirement to be issued the 1099-K. And then ultimately in 2026, the threshold will be $600. And so the government took a step back with starting out at such a low threshold, and now they've increased the threshold and taken a phased-in approach. And this just got updated in November.
Okay. And that's good because I think people were like really scared on what they were going to do. And let's be clear, everybody, this got started because people were doing all kinds of things during COVID, taking all kinds of money. And so this is one of those things that allowed them to say, let's really start tracking this money because people were not using some of these particular services in the business realm. They were using a lot of personal services, but then making business money. And so they want to be able to track it. Now, I want to throw one thing in before we get to the quarterly taxes, just so people know, because all year long, I've been talking about the BOI, which is the Beneficial Ownership Information Report. And that BOI report right now is on pause. Okay. So there is an injunction that has happened in court, which is saying that at this exact moment, just say pause. Let's use that word. You don't have to do it by January 1st, as it was initiated by the U.S. Treasury Department. However, I would encourage you to strongly still go ahead and fill out the BOI report. And I'm going to go ahead and type it in for you. And you go to fincen.gov. So FINCEN.gov in order to fill out that BOI report. And so basically what it's doing is it is allowing you to say that I'm the one that owns this business. I was just at a thing last week with the FISO Friday that was hosted by Echo, and people were actually getting their reports done while they were in the actual workshop. So it doesn't take that long for you to do it. But I would suggest, even though it's on pause, you know how the government is. You don't want to have any fines or anything like that. So I would strongly suggest going to fincen.gov and, making sure that you have your report in there. And then if I could throw in one other thing for you to be cognizant of, when you get to the top of 2025, to also take into account that you do need to fill out your annual report if you are in North Carolina. And that's usually $200. So I'm going to type that in. And that's something where you go to the Secretary of State website, so sosnc.gov. And usually that's $200 for you to fill out that annual report. And that's going to be for all of our LLCs and corporations for you to consider doing that. If you are a sole proprietor, that's not something that's applicable for you. But since we're talking about taxes, money, things to make sure that you are in compliance, these are some things that we wanted you to know. So I love to throw in a little chocolate, a little bell and whistle, a little something extra for when you come out, because this is all about you getting the information that you need. So is there any other things that I'm missing that you want to add in, Eunika, about that?
No, that's perfect. Anytime you can get ahead of the game and be prepared, the better.
Yes, for sure. So now, Estimating quarterly taxes. For this part, some of you may not have been doing your quarterly taxes. It is literally the last quarter of the year. So, what would you recommend to people who have not been paying quarterly taxes? And can you kind of explain what they are and why people should do them for their business?
Sure. So, calculating your income and your expenses, you want to make sure, first and foremost, that you are using the most current and up to date financial statements for your year end. And then on a quarterly basis, whether your year end is December 31st or whether your financial year end is June 30th, you want to, on a quarterly basis, use those current and up to date financial statements to estimate how much tax you would owe. And this is to avoid an underpayment penalty. So not only do you have to keep in mind wanting to pay your taxes and decrease your liability in a timely and accurate manner, but as it relates specifically to taxes, you want to avoid penalties and interest for not having done so. And then on a quarterly basis, if you're estimating based on good financial information and quarterly reporting those things, and you can do it online, pay quarterly what you estimate based on your financial information that you have. And then that way you're not stuck getting a big bill at the end of the year when you do your final annual submission. You've already decreased your liability, and you can also use that as a forecast to kind of look ahead and talk to even lien holders or creditors if they want to know and see that you are a responsible person. A lot of times they will ask you for your tax documents, which will include your quarterly submission, and that's always a good indicator that you can be a good person to extend funds to, because they see that you're on top of your financial game, so to say.
Now, when a person, and so I'm going to ask you this question possibly in a couple of different ways, just so that this way everybody's clear. So, estimating is basically saying, this is what I think that I'm going to make over this quarter. And you're paying taxes on that amount that you're estimating. It's not saying that this is exactly what I'm going to make. So let's just say hypothetically, you could say over a quarter, I'm just going to come up with a number, $10,000. So then they would be paying the taxes on that $10,000 that they think that they're going to make. So with that, the question would be then, what percentage, I mean, I know the answer, but I want you to tell them what percentage should they take out if they're estimating the quarterly taxes?
It's individual. So there's no set in stone because each individual is different. And once they estimate the 10%, normally it's around 10%. And the key is to just make sure that you're not owing the government, or the government doesn't owe you. So that's key in estimating how much you owe, but you don't really know until you do that annual statement. And so generally speaking, most small business would do a 10% on gross profit for their quarterly. However, the actual percentage is very individual, based on the industry that small business is in, etc. And whether it's seasonal too. If that industry is seasonal and they get the majority of their business in the fourth quarter, then the percentage may be different.
Because of the quarter. So basically, if I'm having most of my business Christmas time, then I'm not going to take out the same amount that I would in the summertime because I'm not making as much during that time frame. So what I typically do is take out at least 20% because I just want to be safe and above board. Now, would you say that it's different for people who are in a LLC in comparison to like a corporation?
Well, LLC's income is tiered, so yes, it's different. The sole proprietor uses the Schedule C, which ultimately the profit or the loss ends up on the 1040 form, which is an individual tax return. So that tax rate may be a little bit different. An individual tax rate and its tiered hierarchy versus a corporation tax rate and its tiered thresholds are different. So the answer to that question is yes.
Okay. And then if a person is still working their day job, and so they're getting a check, that comes in weekly, bi-weekly, monthly, however it comes, and then they still have this business on the side, those would be the people who would then file on that Schedule C.
Correct.
Okay.
Mm-hmm.
And so, I mean, I just kind of want people to kind of look at all of the different nuances depending upon where you fall in your business. And if anybody wants to type in, and this might be the time for you to really ask these questions, because it is, right? When we have the professional here, maybe you have a slightly different situation and there's something specific where we could give you a yes or a no. Feel free to go ahead and type in. And so the other thing that I want people to think about with this, as far as the estimating, you mentioned, and this is the craziest thing, but thanks, government. You mentioned that if you don't pay enough taxes, then there is a penalty for you not paying enough. And so when you think about it, when you work a day job, right, they take the taxes out of every one of those checks. And so therefore you're already, or you should be, kind of paying into that tax system. When it's you working your own business, it's your responsibility to do that. Hence, the quarterly taxes come out. So if a person is a little bit under that, when it comes time for taxes to be filed next year, then they will have a penalty and they will still owe on the taxes, right?
Correct. And that's why preparation it's so key. And knowing, having information and sharing information, such as the session we're doing here today. A lot of times people say, I just didn't know. Well, you got to take advantages of opportunities such as this, so that you can say that you did know, and then you don't have that lesson that you learned from not having done it initially.
Okay, now what about the people who say, well, listen, I paid a little bit over. So if I estimated, let's just say you went with your number of 10%, but then I said, listen, I'm going to make sure I got 20% because I don't want any problems. When I get to next year, then maybe I've paid more than I should have paid. So what happens in that situation?
So you get a choice. Either you can get a refund for what you pay over, or you can leave those extra over. We're going to call it an overpayment. You can leave that in your kind of account or your reserve with the IRS and apply that to future earnings.
And see, that's one thing I've never done. I'm always like, give me my check. But, in us having that conversation, I was like, if we're going to keep making money and we've already spent it, it might make sense to just go ahead and leave that money there. And then this way, I kind of look at it as a savings account so that I've already paid into it and then I don't have to think about it going forward. Now, the one thing that we haven't talked about is the difference too between, because a lot of people may not be paying attention to, state taxes and federal taxes. So when we're paying these estimated quarterly taxes, typically, where are they going?
They're to the IRS. It's not affecting your North Carolina state taxes at all. This is payments you're going to the federal government or IRS system.
Exactly. So if we're paying and we're doing the quarterly taxes, that goes to the federal. Mm-hmm. But we still have a little thing called the state that needs that money too, right?
And so North Carolina is notorious for those of you that are watching in the state of North Carolina. They're notorious for making sure that they impose their penalties in a timely manner. So, and the best preparation for that is to make sure that your financials are accurate.
That's it. And so don't forget about the state taxes also. So that's why I want people to understand typically what this specific portion is. Quarterly taxes are going to the federal, but the state, she wants her money too. So don't forget about your state taxes. And then would you say to take out about the same percentage for the state taxes as well?
I would say create a reserve on your balance sheet where you're separating out and preparing to pay those state taxes. And normally, most people, after they've been in business for at least 3 years, they can kind of estimate based on prior years liability with the state, how much they should be planning to pay the state, because we want to make sure that we're operating. When you first start out, you may not make money for a few years, but you want to make sure you're still preparing for those outstanding liabilities, such as state taxes.
Okay, now this is something we talked about, but I have got to let the people know. So we did the PBS special, yay, over there with Kenya Thompson. And I was really, really happy to be on Black Issues Forum. And my co-guest was Kevin Dick. And so I see Madison Potter is on today, and they are from Carolina Small Business Development. And then one of my besties over there is also Jonathan Collins. So, you know, we go back. We love working with this particular company because they are a CDFI in the state, and they then loan money to small businesses. So one of the things that you mentioned was being in a position where if people do want to loan you money, then they can look at your records and they can make decisions that you are financially, you know, hopefully solvent, that this way they can decide, yeah, we'll give you some money, right? But one of the things that Kevin mentioned on that show was he was saying, you know, like, are people actually doing their taxes so that they don't pay taxes, or are they doing them so that they will be in a position to borrow money? So for instance, when we're talking about the estimating of the quarterly taxes and we're saying, okay, well, go ahead and get your taxes done. And we're looking at the fact of, we don't want you to be under what you need because we don't want you to have that penalty. And we want to make sure that this way you don't have to pay anything next year. But a lot of people will try to zero out things so that this way it doesn't look like they made so much money so that they don't have to actually pay so much on taxes. But if you are trying to get funding, you do need to show that you're actually making money. So can you give people advice on that? Because the goal of business is to make money. We do not like to pay taxes, do we, Tammy? No. We don't like to pay them, but we also like not going to jail. And we also like to keep our business going. And if we do decide, yeah, we need a loan, we want people to look at us and say, okay, you know what? Those people are doing good. We want to give them some money. But taking a loss all the time is not going to get you there. So can you speak to a strategy that a person might utilize in order to be considered, favorable when it comes to getting a loan?
Sure. First of all, I want to say thank God for CDFIs and the services that they provide and the clientele in which they serve. Because so oftentimes when you're looking at the traditional lending market, the way they evaluate and analyze credit worthiness is so highly stringent. However, CDFIs have a much more flexibility in how they are able to service their particular clientele. And so strategy with regard to taxes in your general business operation is for your financial information to be timely and accurate. No, we don't want to have to pay the government money, but guess what? That's the nature of the beast. That's no truer statement has ever been told is that two things that are certain, and that's death and taxes. And so oftentimes when you are pursuing credit, their packet will ask you for your income tax returns and along with your financial statements. And you can't have conflicting information because you want to have income to show that you're credit worthy, but what you don't want to have to do is pay unnecessary taxes. So that's the key. You want to pay taxes that are due. You don't want to have to pay unnecessary taxes, and you want your financial statements to be consistent, to be accurate, and to be verifiable, because now you may even have to get, depending on where you are in your business cycle, you may have to get an audit of your financial statements and provide that audit along with your financial documents, depending on the lending or the potential lender's criteria. Most importantly, it is not to zero out whether you owe taxes or not. If you owe taxes, that's the nature of the beast. You want to be timely, you want to be accurate, and you want that not only for potential lenders, you want that in order to be able to make good financial decisions.
Okay. And I really just wanted to touch on that because I know we had talked about it before. And I felt like it was one of those things where if people really are trying to get a loan going into next year, and I am a big proponent of getting the things that you need for your business, but that may mean that you need to clean up something else. So when we're here and we're, really in a position of preparing you for tax season, what we want you to know is the taxes are a part. They tell a story about your business. and they may not necessarily tell the full picture of what you're doing, but at the same time they do tell the financial portion of what you're doing. And so if you do decide, listen, I need to grow, like I just don't have enough of my own money anymore, and I want to get some more money from somebody else to be able to grow this business, whether it is maybe you just need to stay in business, maybe you need some working capital, maybe you do want to hire that contractor or an employee, whatever the thing is that it starts from a foundation of you having the money portion together. And so one of my favorite things that I say is you got to have your paperwork together in order to make your paperwork. And I really want people to understand that, have your paperwork together to make your paperwork, because I remember a time when my stuff was not together, and it was opportunities that were there that I just could not get access to because things hadn't happened. And so I want to say this because I was talking to a person and they were talking about getting their government, they were talking about getting their certification, Hub certified, MWB certified and everything. And one of the things that you may have to come across, depending upon what you're trying to get, might be those taxes. They may need to see them. So if they're asking for 2-3 years of worth of taxes, the only reason you shouldn't have them is because you haven't been in business for 2-3 years, right? Like, so if you've been in business for a year, file those taxes and do what you need to do, and then just go, keep on going. But if they're asking you for stuff and you have been in business, there's been people that have lost out on plenty of opportunities because they did not have their taxes done. And that's one of those things where it's unfortunate, but it's also realistic. So with this, let me tell you what we have planned for you guys today. So Eunika Smalls said, listen, you know what? I want to provide these people with something extra. And I was like, girl, what do you want to provide? And she said, I want to provide them with like a checklist of things so that this way they come to the seminar, they understand what we're talking about. Hopefully they get some questions answered. But also, let me just give you a checklist so that this way you can be a little bit more proficient. And I was like, yes, girl. So let me tell you what you need to do to get it. What you need to do is give us some feedback. So if you can scan this QR code, or if you want to type in the link, you can do that as well. And then when you scan it, you'll put in chaos to control, because that's our little password to get into it. It's going to ask you a few questions. And then at the end, you will have a digital download that Eunika has already provided our resources for today. So this is an extra special little something for you guys coming out. But it also lets us know like what you thought about this particular, workshop. In addition to that, there might be some things that you need for your business that we just haven't covered yet, because this is only the fourth one. And these are being recorded. So if you want to go back and you want to watch them again, you're more than welcome to. Or maybe you had a friend that couldn't make it live and you want to remind them, then go ahead and do that. But the thing is, it's going to ask you in there for feedback so that this way, if there's some specific topic that we haven't covered yet, then I'm sure that we can find some type of expert that will be able to help us do that. So fill that out for us, please. And then this way you will get the digital download. That's the only way that you get it. So you do not need to send an email. Don't ask Eunika. Okay. Do not send me a message because you need to fill that out. And that's what, you give, you get, right? So that's what you're going to be able to do. And then this way you'll get that digital download, and it's going to come immediately. So as soon as you finish filling it out, whatever email you use, it'll go ahead and it'll send it right to you. And then this way it allows us to be able to make sure that you have those resources in your hand. Now, is there anything else that you want to tell people or anything you want to leave them with? Because the question would be, okay, well, Eunika, thank you for all of this, but who's going to do these taxes for me? So can you give them some references for other people that can help with taxes?
Sure. What I'm going to, a very good friend of mine and very astute individual, her name is Eunika Wiggins. That's spelled Eunika, last name Wiggins, Wiggins. And she has been doing bookkeeping / taxes for years, and she is taking new clients. She was not available today, but I spoke with her in reference to putting her information out there in the atmosphere. So I'm going to invite you to Google her name, and her tax information comes for her business. It comes right up, and she's actually located here in Greensboro off Meadowview Avenue, near the mall. So she's happy to facilitate doing your taxes. She's a subject matter expert, and she's anticipating you getting in contact with her if you have any follow-up questions or concerns. But I'll just end with saying taxes is something that lends itself very well to the concept of beginning with the end in mind. If you begin having notated all the things that are indicated in the checklist, you will be successful in completing a accurate and timely tax information. And that's what you want to be. And that's for the future, for your current, and so that you can make informed decisions.
Oh, I love that. That was a great way to sum that up. And so hopefully everybody has gotten our QR code. I do want to let you know, because we don't play games. January on the 20th, we're doing like a special MLK day from Chaos to Control Biz series. And so that's going to be at 12 o'clock, same thing. We're going to be featuring LaShawn Harley of Being and Becoming. And we're going to be talking about breaking down silos. Now, why are we starting the year off with that? Because as business owners, we get into our little niches, into our little corners of the world, into cliques sometimes, and we need to break down those silos. So if we start the year off talking about the things that you need to do to be a little bit more proactive in your success and how you can then kind of spread your wings, that's an important factor for us. So we definitely want to help you to be able to break those silos down, whether you are, doing this as a side hustle or full-time, or whether you are an entrepreneur service organization and you just stay in your little niche sometimes and you don't get out into the world. So we're going to be talking about that on January 20th, and registration will be up for that a little bit later today. In addition to that, I do want to invite you guys out because we are launching our Give It, Get It membership, and that's going to be super fun. So it is for business owners and entrepreneur service organizations as well. That launch is going to be on January 4th here in Durham, North Carolina, and people are welcome to come. It is free. We do have a suggested donation though. And so we're going to have brunch and we're going to launch the platform. And when I tell you that it's going to be something that will then help you to hopefully break down those silos, but also get connected to other business owners like Eunika, because the thing is, before you came today, you may not have known me, you may not have known Eunika, but maybe you just saw the subject matter and that drew you out. Or maybe you did know her, maybe you did know me, but either way, we always try to make sure that we have really great content for you and we're able to answer your questions. So we have about 3 minutes left. If anybody has any questions or comments, we would love for you to go ahead and type that in. Maybe you learned something. Maybe there's one thing and you were like, okay, I'm really glad I came because I didn't know that. Or maybe, you were like, listen, I was looking for an accountant anyway. And so thank you for telling me about Eunika Wiggins. If you want to leave a comment, now would be a great time to do that. And then outside of that, we will see you in January. And so our next From Chaos to Control Biz series is January 20th. And again, that is on MLK Day. So if you're off, you can join us 12 o'clock. And if you're not, then guess what? It'll still be recorded. But we always love for people to join live because this way it allows you to be able to contribute and hopefully get your questions answered. So yes. All right. So everybody else, guess what? Eunika, thank you so much for joining us today because this has been really great. It's been a really great thing to be able to get some of those questions answered, not just for me, but for things that other people were asking me to ask you. And then people that were really on live being able to answer, get some of their questions answered. Madison said, thank you for taking the time to educate people about this important topic. Of course, right? And so this is also why I tell people you have to be in the room, because had I not come to that conference, we might not have met in person when we met. And then maybe this wouldn't have happened today, and then also taking the step to say, hey, would you be interested in? And she was like, yes, girl. And so that's how this whole thing came about. So, getting those opportunities, but, also being ready to accept them. And I appreciate you for being ready to accept this invitation today.
My absolute pleasure.
Yes. All right. Well, everybody, make sure that you always show up and show out and you continue to give it to the people. Have a happy new year. And if you're watching this in the new year, then still have a happy new year. Okay. All right. Bye, everybody.